Don't worry about interrupting me in the middle of something. Um, I want you to ask the questions while they're fresh in everybody's mind so I can go back and make sure that we get everything answered. And because I like to do a little bit of lighthearted stuff, I'm going to start this off with a little bit of a fun video that maybe some of you have seen before. And please remember to ask me questions. It makes it more relevant to everybody listening. Here we go. Hi, I'm Tom Alston, and I'm going to give you some reasons why you should always pay sales or use tax on the purchase of an aircraft or a vessel. Let's get started. Number one reason, you're a politician and you'd get recalled if you were discovered to not be paying your fair share. Two, you're a private citizen and you believe politicians can do a better job spending the money than you can. Three, the tax is nothing but petty cash to you and you don't want to do the extra paperwork required to legally avoid the tax. Four, your corporation is doing well and you don't want to be attacked by politicians for being a corporate jet owner. Five, you're timid and can't face a tax auditor. That's my job. Let me do it. Six, your wife or girlfriend will nag you for taking a risk. I have a couple of questions for you. Where was she when you took the risk that created the company that created the wealth so you could buy the vessel or the aircraft? If she was complaining about risk then, you've already proved to her that risk is worth it. Seven, you got such a good deal on your aircraft or vessel, you feel like you should share something with the government. I never feel that way. Why do you? 8. Although the Supreme Court of the United States of America has affirmed your right to legally avoid tax, you still think it's illegal. 9. The last time you got audited, you met a great-looking woman that worked for the tax agency, and you want to see her again. Sure, all these are kind of in jest, but if you don't like any of them, you don't want to use any of these reasons, and you want to legally avoid the tax on an aircraft or a vessel purchase, call me first before you buy it. So here we go, and let's get started. I'm going to go through certain things here about how the California law works, and I want you to change your mind about something. I don't want you to watch this from the viewpoint of how can I defend myself against the state of California? Because if you do, you're going to be making judgments about what I'm showing you. Say, that doesn't apply to me, that doesn't apply to me, that doesn't apply to me. I want to open your mind up to the danger. And the only way I know how to do that is to have you change your mind about who you are while you're listening. So for the next hour or so, I want you to be watching all this information from the viewpoint as if you are a brand new employee of the taxing agency. You're trying to make everything taxable, okay? And you want to be a hero and you want to get promoted. So change your mind about who you are today. Assume the beingness of being this brand new employee, and let's get started. What I'm first going to show you is what's the fraud penalty. Take a close look at that, read through it, and I want you to notice something. It says any purchaser. It doesn't say any California resident who purchases a vehicle. So the way that this can be currently applied is even if you are a foreign registered aircraft and you've registered it outside of the state of California for the purpose of evading tax. Now, what state of California uses as support for their position is that you don't file a California sales and use tax return. So most people who are out of state or out of country residences would never think of filing a tax return here on California use tax. So this is how they get trapped. Remember, I want you to read this backwards. Read this from the viewpoint that you're the new employee and you're trying to use everything that the state of California has to try and make things taxable. The other question that gets a lot of people in trouble is about who's a resident and who's a non-resident. Here's what you need to see. Any aircraft is subject to California use tax if any of the following apply. Any is the operative word here. If you'll notice, it says the aircraft was purchased by a California resident as defined in Section 516 of the California Vehicle Code. If you're, say, a resident of Ohio and you went and you got a communication from the state of California about sales or use tax, and you took it to your local Ohio CPA and you asked him, am I a resident of California? He's going to tell you no. The reason is 99.9% of what CPAs do is income tax. And there's a separate definition of a resident of California from an income tax standpoint. But California does not use an income tax definition. So even though you're not subject to California income taxes, you're not a resident of California for income tax purposes. You can be a resident for sales and use tax. Trust me, we're going to go through all those definitions. If the aircraft was subject to property tax in California during the first 12 months of ownership, you can be subject to property tax in California, whether you think you're a resident of California or not. The only requirement is that they find you here. Or if the aircraft is used, stored, or registered. Those are not names of cities in the state of Oregon. I capitalized the "or" so that you realize that any one of those three is possible. If you use it, in other words, if you fly it into California, if you store it, you're on a tarmac or you're hangar it in California. And the obvious one is if you register with the FAA with a California address, you're going to be audited. Here's where we're going to get into the following of evidence for residency for the purpose of vehicle registration. I'm going to take you through what the California DMV uses and how, remember, think about how you're going to use this to be the hero and collect the tax, because you are now sitting at your desk inside the state of California trying to make everything taxable. Little a is an address to what registered to vote. That's pretty simple. You're probably not going to be registered to vote in California if you're a resident of Kansas or Florida or Ohio. But here's where I start to see some weaknesses. Location of employment or place of business. Let's say that you work for a large accounting firm somewhere, let's say in Ohio, and they send you out to California for about 2 or 3 months to audit some major corporation's books. What is your location of employment during that time? Have you become a resident of California? Remember, do it from that guy. You're the new employee, and he's going to try to make it taxable based on that. Here's a little scary one. Payment of resident tuition at a public institution of higher education. We'll go back to you're a resident of Ohio, and you have a child who wants to go to school at Cal Berkeley or to Stanford. You would think that your child is going to pay non-resident tuition. But because I have a daughter who just a couple of years ago was going through the process of applying to colleges, I discovered that there's ways that kids can transfer their residency requirements between each other, and you can wind up paying the lower resident tuition. So make absolutely certain if you have a child going to college in California at a public institution that you check and make sure which form of tuition she's paying. If she's managed one of these residency swaps, you could be subject to tax in California because of your residency, because of this requirement. Little d, attendance of dependents at a primary or secondary school. Let's say you're the same guy from Ohio. You're married, you have a couple of kids, you get a divorce, your wife moves to California, and your children are going to grammar school. You're a resident of California for the purposes of sales and use tax. Look at the next one, filing a homeowner's property tax exemption. I recently discovered that many of my friends in Northwest have homes in Southern California to come to find some sunshine. I'm absolutely certain that your CPA told you to file your homeowner's property tax exemption to save you money on property tax. If you did that, you're a resident of California for the purposes of sales and use tax. Little f, renting or leasing a home for use as a residence. Let's say that you're the same resident of Ohio, you had a pretty good year, you want to bring your whole family out to Southern California, you stay for a month in the Disneyland hotels, you go to all the amusement parks, you drive down to San Diego, you go to the San Diego Zoo. No, I'm not hired by either one of these organizations to have you go there. I want you to think about it. If you're in the Disneyland Hotel, where are you renting a home? It's a residence. You're living there. All right. Remember, we're thinking this through of how you, as the tax auditor, could use any of these little subjects as a weapon to create a tax liability. G, declaration of residency to obtain a license or any other privilege or benefit not ordinarily extended to non-resident. What does that mean? I have no idea, but if you're trying to make something taxable, you could use this in any way that you want. Little h, possession of a California driver's license. That's a simple process. You either have one or you don't. But here's the scariest one of the whole bunch. Little I, read it. How would you use it? Think about that. Any way you want. Other acts or occurrence or events that indicate presence in the state is more than temporary or transient. Any way you want. So beware. I'm not trying to suggest to you that everyone that works for the state of California is the people who are trying to come after your aircraft or vessel tax are evil people. But I'm telling you right now, if you don't approach it as if a SWAT team and the district attorney just showed up at your house and they're going to shoot you, if you don't have the documentation that supports your aircraft or vessel location for the whatever test period they're applying to you on a 24-hour-a-day basis, you're in a lot of trouble. So be aware that all of this can occur and this can happen to you. The slide says if the Board of Equalization and that agency has recently changed its name, it's now called the California Department of Tax and Fee Administration, but it's the same thing. It's the same people. If they discover the owners or shareholders of an out-of-state company are California residents, the BOE can decide to apply what's known as a 12-month requirement, which we'll get into a little bit later. So, have you ever Googled yourself? Try it sometime. The things that are on Google about where you are or who is the owners of a LLC or a corporation. There's so much information, which, by the way, you allowed to be put out there. They're going to use it. Trust me. They know how to use computers. They know how to use Google searches, any search. Just remember that. All that information was allowed out there by you. Here's the most important thing that I want you to go away from this webinar with. This statement right here. You don't get to decide. The state of California always gets to decide whether you are an in-state or an out-of-state resident. Are there any questions on where we have gone so far? And I'll give you a 30-second pause here to think this up. Somebody asked me, how can the state of California do that? It's kind of a funny question because I live here and I deal with this all the time. The only answer is because they can and they will. The government of the state of California currently is deciding that it wants to violate federal laws in certain areas, and it just decides to do that. So why are you surprised when someone from California says you're taxable if you don't do this, even though it doesn't make any sense to you? Just remember that you see all the stuff about California just like I do. And in most cases, you should be afraid. I'm going to warn you right now, if you ever get contacted about anything having to do with sales and use tax in California, do not respond to the letter. Do not respond to a phone call without calling me first. I will explain to you the danger. I will interview you, might find out what your fact pattern is, and take you through that and prepare you to deal with them. My number is 916 691-9192. Moving along. Here, the good news is that this issue of whether you can legally avoid taxes or not already went to the Supreme Court, and I'm going to present that to you right now. That's what the Supreme Court says. Not only do you have a right, you have an obligation to avoid taxes. Can you guess how long ago that case was decided? 1934. My guess is the most people that work for any state taxing agency or any federal agency who treats you like some kind of tax slave has never read this, has never seen it, and even if they did, they would decide that it didn't apply. But there's the court case right there. It cannot be doubted. Okay, you have a legal right as a potential taxpayer to decrease the amount of what otherwise would be your taxes, or to altogether avoid them, which when it comes to sales and use taxes in California, all 1,400 cases that we have done successfully, which is every one that we've ever handled, have paid zero tax, zero. Here's a little bit more information on that written by the federal appellate judge, Learned Hand. Anybody who's in the law business knows he's very well known and very well respected. Read it. You don't have a patriotic duty to increase your own taxes. All do it, rich and poor alike. All do it. Nobody owes any public duty to pay more than the law demands. No one. Don't feel guilty about not paying taxes. If you do, just send all of your money to them every year until you eventually go out of business. What is against the law is evading taxes. Avoiding taxes is a legal method. Evading is illegal. Is there any questions on that? When it comes to avoiding California sales and use tax, a lot of people think all you got to do is create a Delaware or a Montana or an Oregon corporation and the California taxes don't apply to you. And you're 100% wrong. It doesn't matter where your aircraft or vessel is registered. It only matters if it enters California at any time during the first 12 months after you take possession. And if you can't document and support that it didn't come into California at any time before that 12 months are up, every transaction is presumed taxable by law in the state of California. Are there any questions about anything that I just went over? Bill, Chris, David, Doug, send me some questions. I'll be here. All right, so now we're going to go into the potential exemptions in California law. First, we're going to clear up a couple of definitions. I think it's important that you know the difference between sales tax and use tax in California. And it's important to know that California is always taxing you on the gross receipts. What that means is whatever the actual price that you paid on something. Some states only tax you on the difference between the sales price and the trade-in. California is not one of those locations. It's always going to tax you on whatever the contractual purchase price is of your aircraft or vessel. Here's the definition of sales tax. It's a very narrow definition. A sales tax transaction in the state of California is a piece of property that's delivered inside the state of California, and it comes out of the inventory of someone who has a California seller's permit. All other transactions are use tax transactions. And to be perfectly honest with you, even though I use the term legally avoid sales tax, it's not possible to legally avoid sales tax. What it is possible is to legally avoid use tax. Okay? Here's the definition of use tax. Notice that the obligation to pay the sales taxes is on the seller, and the obligation to pay the use tax is on the buyer. And 100% of the time, our clients are the buyers. You're going to see in the first sentence 3 letters called MTE. This is the term that gets a lot of people who try to do California sales and use taxes in trouble. Because what MTE stands for is mobile transportation equipment, which is all aircraft, certain vessels, and certain vehicles. And it really, where it gets people in trouble is when they're doing leases. Typically in leases in most other states, it's a sales tax transaction to them. In California, they have a separate category of mobile transportation equipment, which I've defined for you, and that's a use tax transaction. The tax is actually on the lessor, not the lessee. And if you don't understand that distinction, you can get your clients in a lot of trouble. Here is the definition of what mobile transportation equipment is. Take a good look at that. It doesn't just include aircraft and vessels, it includes several things. The definition of a ship, where it says aircraft and ship, is any vessel that's in excess of 40 feet. And it doesn't include passenger vehicles. Anytime from here on out, if you see the term MTE, just substitute the term aircraft or vessel, depending upon which area of law has your most attention on, and this will make sense to you. The statement, unless the out-of-state dealer has nexus, anybody who's a CPA or an attorney on this webinar knows what that means, but a lot of us normal people don't know that. Here's the definition for you. So let's take, for example, Cessna. Cessna, even though it delivers a lot of its aircraft out of Kansas, Cessna, as a manufacturer, has a California seller's permit because they have nexus. And that's because they have dealers inside of California, inside of California. So those kinds of questions, you need to be careful. If you're buying new airplane directly from a manufacturer, that manufacturer probably already has a California seller's permit. It doesn't really change a lot for you. I just want you to be aware of it. If it's a person-to-person or company-to-company, provided that the selling company is not a retailer of aircraft, it's automatically a use tax transaction. A lot of times the aircraft salesman will tell you to wait until the state of California sends a bill. This is wrong. Don't ever add time to anything. Do not do it. As I wrote in my new book called The Equality Police, procrastination is like sipping poison and hoping it's not killing you. Okay, so whenever you know you're getting ready to buy something that's going to be used in and out of California, contact me so that I can prepare you to deal with that, and we'll deal with it in a very proactive manner. The state of California is under no obligation to timely advise you, but they can charge you a failure to file penalty and start charging you interest if you don't file on time. And my guess is you don't know what the timeline is for that. So that's why you need to get somebody like me involved in this. Most of the commonly used exemptions from what I call transactions taxes. Sales tax and use tax are the same rate. They're based on the county that the airport is hangared or where the boat's in the marina. That's the rate, and they're different all over the state of California, from as low as around 7.25%, and now in certain places it's up over 10%. So always take possession of the aircraft or the vessel while it's physically located outside of the state. If you find an airplane that's located inside the state and you want to buy it, you make as a condition of your delivery that the seller deliver it to you outside the state of California. If it's a vessel and it's in one of the marinas in California, you make as a condition of your offer that the vessel be delivered to you on the water outside the 3-mile limit because you're technically outside of California. Some people think that's 12 miles. That's a federal limit. That's for the United States. State of California only goes out to 3 miles. And you have to be careful in Southern California because if you just drive 3 miles off the shore and there's an island out there that's technically part of California, you could be driving inside that 3-mile limit. So just be aware of this if you're doing vessels and possession on water. So what I want you to do is always request as part of your purchase offer that the seller deliver your aircraft or vessel to you outside the state of California. The rules about where to take delivery are as varied as each state's laws apply to your specific type of purchase. The part in capital letters where it says always seek professional guidance, that's kind of a subliminal message because I think you should always talk to me. I'm very, very confident in the results that we're going to provide for you. We have never lost one of our cases. All you have to do is hire us, follow our instructions, and you're going to legally avoid the tax. So call me. There's 3 kinds of exemptions, and I'm going to skip through this part of the presentation that talks about how the law used to be because it'll wind up in a political discussion. And for those of you who know me, you don't want to listen to it. So what we're going to do is we're going to go through some of the use tax exemptions for aircraft, vessels, and vehicles. The one that doesn't require any business documentation is known as the principal use test. It means that you have to take possession of it outside the state and that it never enters the state at any time within the first 12 months. The second one is the interstate and foreign commerce, which we use 99% of the time for aircraft owners because they're using that exemption, they're able to keep the airplane inside California. You can do that literally every night of a test period. And the last one is common carrier test if you're using it in Part 135. Principal use test. It requires out-of-state possession. It has use and storage requirements in it. It primarily will use that for vessels because very few vessels are actually used sufficient amount of time in business to be able to use this, to be able to use the interstate commerce exemption. And there's a fairly simple way of documenting where a vessel is located. So we'd like to use that for vessels. Usually aircraft owners don't want to spend the amount of money that they do on an airplane and leave it outside the state, but they can. They have that choice. It is something that you can accomplish. Here's where we go back to when I was talking to you about residency. If you're considered a California resident, and remember who decides that? The state of California gets to decide. Okay. It must be used and stored outside of California for more than the first 12 months of ownership. So it starts with an out-of-state possession. Again, if you find an aircraft that's located inside the state of California, you make as a condition of your purchase agreement that the seller deliver it to you outside the state. And you cannot ride on that aircraft from inside of California to the out-of-state delivery appointment. Okay? You got to be careful of that. You nor anyone who works for you is allowed to be on that flight from inside of California to the delivery location. If the state finds out about that, they will consider that you are exercising a right of ownership over the aircraft while it was in California, which in their mind will mean that you took possession inside the state of California, and it's going to be taxable. Here's all the states, okay? If you're a non-resident and you purchase an aircraft, you still start with an outside of California delivery, but you only have to be able to document and support that the aircraft is stored overnight outside the state more than half of the time. And when you hire us, we're going to raise the bar to 60% of the time. So just multiply 0.6 times 366. I think it's going to come out to 219 days in some state other than California. And whenever we're talking about states for whether it's the interstate commerce or the principal use test, that includes other countries. They're outside of California, so they're out of state. The most important thing is that you don't get to decide. The taxpayer, the buyer, the purchaser is never the one who gets to decide. Those decisions are always made by somebody who works for the tax agency for the state of California. And any appeal that you go to, you're always dealing with someone who works for that tax agency. The burden of proof is that you must be able to show without a shadow of a doubt where the aircraft was located when the title was transferred and throughout the test period. All of these vessel and aircraft transactions are presumed taxable by California law. It's kind of like being guilty until proven innocent, but that's the way that it works when you're dealing with the state of California. And actually, if you think about it, that's the way it works with most tax agencies. Who has the burden of proof to support what amount of income tax you owe? You do. You have to file the tax returns. You have to support the documentation for any write-offs that you're trying to claim. So it's presumed taxable until you support that it's not. And you don't want it to be any other way, because the only way, especially, and I'll answer this from the state of California viewpoint, the only way you could get around you creating the documentation, in my opinion, would be to hire someone from the state of California's taxing agency to live with you and video the possession and video how the aircraft was being flown or the vessel was being used. You want to live with a state tax auditor for 12 months or for 6 months or for any period of time? The answer is of course not. And you're in control of the documentation, so the burden is on you. That's how serious it is. That's why I made that comment about treat it, even though this is an over-the-top analogy, treat it like the district attorney shows up at your house with a SWAT team, and they're going to shoot you on the spot if you don't have the documentation that supports where possession occurred and where it was located and how it was used. If you can't do that, they're going to shoot you. That's the way you should treat it. Any questions about the principal use? Come on, Jill. I can see you're still sitting here. John, come on. Ask me questions. You'll help everyone in the group by asking questions. How about you, Michelle? All right, we're going to move on. The common carrier exemption, which means that the aircraft is being used primarily under Part 135. This is the one exemption in the state of California where it doesn't matter whether you take possession inside the state or out of the state. But I will always suggest to you that you take possession out of state. If you're planning on using an aircraft in charter, I want you to go take possession out of state and do all the things as if you're starting out with the interstate commerce test, which we're going to get to last. Okay. The reason for that is I can cut down your test period from 12 months, which is the term for the common carrier test, to 6 months in a lot of cases, and we run a specialized dual track program to cut your time down. Okay. This test period, the flight hours start accumulating from the first operational use, which in this instance, it means the first time the wheels go up, the first time the aircraft is in flight. That is when the hours start accumulating. The test period is 12 months long. Within the first 12 months of use, it must be used more than 50% of the time. The slides show the law, and I'm going to tell you when you hire us, which you will do, because we never lose, we raise the bar to 60%. We know that by creating that 10% margin of error,
we're overcoming any natural laziness of a tax auditor to try to dig through that, because 10% is a lot of hours, okay? And they can't just, I mean, if I let you stay at the 50% threshold, well, I'll give you the warning right now. I know that most aircraft owners are classic A types, okay, which means that you're not adverse to taking risks. I know that because you're a pilot, you understand pushing the envelope. So if I tell you to bring it in at 50%, you're going to bring it in at 50.5 or 51%. When you do that, you are inviting the tax auditor to get into your logs and try to throw out the least amount of flights. You raise your risk level extremely high. So as long as you're over 60%, it kind of, oh no, it's going to take too much work to overcome this. So that is the reason, okay? We do this especially for aircraft to overcome your ability and willingness to take risks. And it exposes you to too much danger. And because we're in the safety business, technically, okay, I don't want you to do that. The state devised a common carrier flight as a flight that is flown under Part 135. This last sentence here is what gets a lot of people in trouble. And all Part 135 carriers know that if you're on a reposition flight or a deadhead flight that doesn't have any passengers on it, that are not billed, excuse me, I don't want to get ahead of myself. Any deadhead or repositioning flights, you technically are flying under Part 91. Not technically, you are. You're flying under Part 91. Those don't count, even if you bill for them. Even if you bill for them at the full charter rate, if there's no passengers on it, you're not flying under Part 135. Your logs are going to show that it's only flown, that it's being flown under Part 91. Okay, those hours are counting on the bad side of the test. So be highly aware of that issue. Any questions about the common carrier use relative to California's exemption? Everybody should have a cup of coffee right now and wake up. Now we're going to talk about the commercial interstate flight hours test, which is what we use almost 100% of the time to legally exempt people from the California use tax. The restrictions that apply to the principal use test don't apply to the commercial interstate flight hours test. So it doesn't matter whether you're a California owner. It doesn't matter if you're found to be property taxable. It just doesn't matter. Okay. And the good news, as I warned you about earlier, is that you can keep the airplane inside of California every night of the test period and still meet this exemption. There are three things that you must do, and they must be done in the following order. You must start with an out-of-state possession. You then have to make a first functional use flight, which is defined as an interstate flight. In the city that you land in, you have to have proper documentation that supports that when you went to that location, it was for business. And if it has a jet engine or a turbine engine or has more than 6 seats in its propeller, there has to be a passenger on that flight. And that is the only time during the whole test period that there is required to be a passenger on that flight. The definition of a passenger is if it's a 2-pilot airplane, there has to be 3 people on the plane. If it's a single pilot airplane, there has to be 2 people on the airplane. One's a pilot, one's a passenger. Okay. There is no requirement that the passenger have any relationship to the ownership entity of the aircraft. 0. It literally could be a hitchhiker. Step 1, out-of-state possession. Step 2 is first functional use, which is an interstate flight, possibly with a passenger on it, and the city that you land in has third-party support that it was for a business purpose. The third step is you enter California. None of the flight hours in those 3 steps are part of the test period. The test period does not actually start until you land inside California the first time. what I want you to do is think about when you land in California the first time. It's like the trip meter on your car. Push the button, all the numbers reset to 0. Okay. Only the flight hours starting with the first flight from the airport that you landed the first time. I know that sounds confusing, but only the flight hours that were starting with the first flight after you've landed inside California the first time are part of the test period. The aircraft must be flown in interstate commerce for more than half, and obviously we're going to raise it to 60% during the 6 months. So when you land in California, I want you to buy fuel immediately. Why? Because that fuel ticket has a date, a location, and a tail number on it. Okay, that date starts a 6-month test. So you estimate the total amount of hours that you're going to put on the aircraft in the first 6 months. And so I can do the math easily. Let's agree that you're going to fly 100 hours. The law is going to require that you do more than 50. I'm going to raise the bar to 60%. That's 60 of those hours. And you get credit for the whole round trip. So if you flew from Van Nuys to Nashville for business and then flew back and you have good business support documentation to be in Nashville, you get credit for all the flight hours there and all the flight hours back. Make sense? Okay, we're moving on. First functional use is a term created by the state of California. It must happen before entering California the first time. It must happen before entering California. We require it to be the first flight from the point of possession simply so that you get it done so you don't forget, because you haven't started the test period until you entered California. You literally could fly it for 100 hours before you entered, and that you're not started the test period. But I want you to get this first functional use flight out of the way because you'll forget. Okay. And the definition of first functional use depends on what type of aircraft. We've already gone over that, but I'll do it again. If it has a jet, a turbine engine, or, these are ors, okay, or more than 6 seats, it has to have a passenger on it. It's pretty simple. Let's talk a little bit about the correct definition of commercial use. A lot of people think when I talk about using an airplane commercially, they think I'm talking about transporting persons or property for hire. That's actually a definition for the Part 135. You can use this aircraft and still qualify for the interstate commerce exemption entirely in Part 91. Entirely in Part 91. Okay. And the good news, right out of the regulation, the term commercial is not limited to for-profit business. That's right out of the regulation as you see listed there, which means if you're flying on behalf of a charity, okay, if you're a client who wants to go to, say, the University of Washington to talk to them about an endowment, most universities are 501c3s. If you're flying up there to engage those people and to donate money for them, you're flying for business purpose, for the purposes of the California sales and use tax. Pretty cool, huh? All right. Are there any questions about any of those exemptions? Then I'm going to tell you what we do, okay? And I'm going to base what I'm about to tell you on the interstate commerce because most of you are going to use the interstate commerce when it comes to aircraft transactions. Okay. From the day that you hire us, the first thing that you're going to get is an initial letter that takes you through all the steps in a format chronologically. It says, when this happens, here's what you do. When this happens, here's what you do. We're also going to give you a notarized form that gets notarized at your out-of-state possession point. The notary is merely affirming that the buyer and seller are at the out-of-state point, or it could be the buyer or seller's agent. Okay. You also purchase fuel for the aircraft on your credit card. The fuel purchase puts the airplane at the location. The notary puts the buyer and the seller at that location. That is how we support out-of-state delivery. We also give you the format of an aircraft log. We don't want you to be using pilot's logs for anything, because if you use a pilot's log and you have more than one tail number in there, you're subjecting that other aircraft to scrutiny by the state. So don't do it. Create an aircraft specific log. Okay. However, the most important thing that comes with our initial letter package is a checklist and a schedule. Okay. Every 30 days, you're going to go to that checklist. You're going to take all the documentation that you've acquired for that month, and you're going to scan it and send it to us via email. Never, ever lose control of your paper document and your originals. In fact, it is always my recommendation that you keep those in a fireproof safe until you get the letter from the state that says your transaction is exempt. Always. Okay. You're going to email that stuff. I'm going to assign your case to one of our auditors. Our auditor is going to take your logs and quality control them. Why? Because pilots make mathematical errors. Pilots write things in there that wouldn't make sense to someone later who's reading them because he's remembering everything that he did and it's logical to him. Okay. For example, a guy might land at an airport, let's say in Santa Maria, California, and the very next line he's taken off from Carlsbad, Palomar. That's not possible. We quality control so there's no mistakes in your logs. We also make sure all the airport designators are correct, and we match those up against all the fuel receipts. Okay, and we're also going to quality control what you submit to us as business support documentation. We never know. We think we do a great job of telling you what to send in to us, but we never know how you've duplicated our information until we see what you sent us. So it's normal that in the first month or maybe the first 2 months, there's a little bit of a learning process that you're going to have to go through. You're going to be really glad that you did, even though it might feel a little bit annoying. So your consultant is going to get together with you once a month and go through and quality control all of that documentation. At the end of the 6-month test period, the consultant is going to prepare the combined state and local consumer use tax return, which is your application to support a claim for an exemption. And before she submits it to California, she's going to run it through our internal quality control review unit. When it comes out of there, it comes to me. So not only are we quality controlling what you're sending us every month during the test period, we then after we prepare the actual tax return, we twice quality control the full tax return. It is because of this constant quality control that we've done over 1,400 of these cases, and we have never, ever failed one. Okay, not one. To give you an idea of the size of our firm, at any given time, we're monitoring around 150 audits. Okay, just to give you an idea of the size and scope of what we do. Okay, and we operate on a fixed fee basis so that it's based on your purchase price. You can kind of figure it to be around 1% of the purchase price. The minimum price, if you have a smaller airplane, is $4,000. We'll be working for you for around 2 years. Okay, so it could be it's less than $200 a month. And we're the cheapest insurance you can buy. The only way you can fail our program is to give us money to do something and not follow our instructions. And I know that you're not that silly. Okay. Are there any more questions about any of these issues? Okay. Then I'm going to talk to you a little about a brand new service called Verify, where we decided to start doing this for our current clients, where we gather your documentation during the test period, whether it's a 6-month or a 12-month test period, and we quality control everything. We are now continuing to quality control your documents after that, because if you're using an aircraft in business, the IRS requires that you maintain that more than 50% of your use of the hours that the aircraft is flown are for business. And we're going to raise the bar to 60% for you. Okay. If you don't, you can't write off anything, the insurance, any of the fixed costs, the gas purchases. You lose it. It's treated like you're a personal use airplane. Okay, so and I apologize for not thinking about this 10 years ago. I should have been helping you for the last decade. But the new program is called Verify, where we look at your documents. And then the good news is that we store them electronically for you, and we collate them and quality control everything that makes sure that that everything works just like we do during the interstate commerce test. Okay. And then we store them electronically on a month-by-month basis. And then when your CPA needs those documents to file your tax return, and that's everybody's business taxes are on a different calendar year, so we understand that, we'll send them to him. Collated by month, gathered by month, I don't necessarily mean collated, okay? And they're already quality controlled, so he knows it's all tied together. That's the minimum purchase that we do, or the minimum quality control work that we do for the Verify program. We do that for minimal cost. We only charge $225 an hour. And generally, we can do all of that work for 1 to 2 hours a month. And there's a benefit, there's an additional benefit to making sure that you can support your IRS deductions. And that is from the viewpoint of your logs being maintained off-site, and all of that stuff will help you maintain the value of your aircraft when it comes time to sell it. If you've ever encountered a sales process where the seller had lost logs or there's things missing, you will presume that there's some damage history that's being cloaked. And that could drop the sales price of your airplane 20, 30, maybe even 40%, depending upon who you're dealing with. So the Verify program is for all people who have an N-registered aircraft that's being used in business aviation, okay? And we're going to help you maintain the value of your aircraft, and we're going to help you maintain the deductibility of your aircraft. And we'll let you know if you're starting to fall, that threshold is starting to fall too low, because you're in danger of losing 100% of your aircraft deductions every year when it's audited by the IRS. Pretty good deal, pretty good options. Okay, so if there aren't any other questions, we've been at this a little over 50 minutes. I'm going to end this webinar. Thank you for attending. We've got a pretty good sized group in here. I hope I was able to enlighten you. Please contact Shay and let her know if there's anything that I failed to cover that you were expecting, because I know that when you come to these things, you have some certain amount of expectations, and I'll make sure that I get an answer for any questions that I created for you that I didn't answer. We've recorded this and we're going to publish it on our website, and Shay will send you a link to that. And you can use the links for any webinar that I ever do at any time. You can send anybody to it. It's not hidden information. We're an extremely transparent organization. Anything that you need from us, we're going to try to get it to you as fast as possible. Thank you for attending this morning. You've been a great group, and I'll see you next time.